Hi friends, this is Chitra. Welcome to my YouTube channel. So today we are going to discuss about one of the versatile tool that can be used for option buying and how to capture the good moves in the stocks and in the index. So today we have Rahul who will go through this tool, who is the head of the concept, and he will help us to walk through the system. Rahul, you can take the control now. You can explain.
Okay. So thank you, ma'am, first of all, calling me here. Okay. So as you said that we are going to talk about one of the, versatile topic that is, actually in the market right now. So as we know that a lot of people are, more inclined towards buying, specifically in the indices, right? So I have a very good tool which basically help them to scalp at least 40, 50, 60 points in every move that we capture, right? Okay. We can use this particular tool in stocks also, but I'll show in the indices first, and then we'll try to capture that into the stocks also, right? Okay. So let me show you. I'll share my screen. Okay. So now once we open the concept, right? Okay. So you can see that this is the screen that we are going to get. Okay. So this is the first user interface, right? Okay. So there are like, a lot of tools in the concept, but we are going to talk about one of the easiest that tool that I feel. Okay. That is the order and trade chart. Okay. So this one is right. Okay. So once I open this chart, so you can see that you will see that there's a, Nifty chart. Okay. Of current month. Okay. So you can see that if you see this chart, this is very simple one, and it's candlestick chart, right? And you can plot any indicators, but I'll just help you with the two specific indicators, right? Before I move, let me give you the concept. Okay. So if I just, we talk about this concept, I'll go 10 years back. Okay. So a lot of people have told me that if you see the order book quantity, you see that there are 5 top buyers and 5 top sellers. And you can see that the total quantity at the bottom, right? So they used to tell me that if the buyers are high, we're going to get, the market should move up, right? And the sellers quantities are high, so market is likely to fall. But that concept was, so not clear, because, that order book does not contain all the, the orders specifically, right? Okay. So it only contains the limit orders, right? But if you see, there are a lot of orders that comes into the market, such as, IOC orders and market orders, right? So market orders does not stay in the order book. Okay. And even though IOC order does not stay in the order book, so it does not give you the clear picture, right? Okay. So what we have done, we have bifurcated this whole scenario, and we have taken out from that order book that how many orders are getting, executed at the market price, okay? Whether from the buying side, whether from the either from the selling side, right? Now, what will happen specifically in this? Whenever you see someone is buying at a market price, it shows that they have a good conviction. How? Even if you see that, let's say the call option is trading at 100 rupees, right? And the price suddenly started moving up. So it goes to 101, 102, 103. Then what we do? We see that the price started moving up. We just go and place the market order, because we have a strong conviction that market is likely to move up from here only, right? If there is no movement happening in the market, what we generally do, we place a limit order. Let's say market is at 100 rupees, and we'll place a order 95, and we'll wait for the market to come to 95. Then my order get executed, right? So that means when market is doesn't showing any movement, what I am having is a conviction that okay, market is very dull. But when market is started moving actually in any direction, I'll just go and place a market order to buy it, right? Reason being, as I told you, that I have a strong conviction, right? Okay. So if I get that, how many people are, placing the market order, and then that particular point of time, I will also have the strong conviction that a lot of people are doing the same thing, right? So that data will definitely help us to, get some understanding about the market. Okay. So I'll tell you how to place it. So once you open the concept, okay, we'll go to the indicators. We'll type buyer. Okay. So you can see that there's a buyer initiated quantity. Okay. So what is a buyer initiated quantity? You can see that these are all the market orders has been placed for buying the Nifty futures, right? And at the market price. So if you see here, somewhere here, if you see that is 21,400 quantity has been there. Okay. So someone has bought this much quantity at market price.
So Rahul, this is for the spot or for the futures of Nifty?
Generally, because futures only we can trade, right? Spot market, in the spot Nifty we cannot trade, okay, right? So generally it is we are taking the data from the futures market. And generally this data is also available for the spots also, like in stocks, right? But generally our application is specifically based on F&O data, so we are providing the data only for the the futures, right? Okay. And
So here,
simultaneously you can get this data for options also.
okay. So this is for the scalping setup you are showing now.
Yeah.
The
So
time
we'll be
frame you
using
have
this data. We'll be using this data to understand that okay, there is a movement likely to come or not. Okay, I'll show you the full setup. Right. So you can see that this is a buyer initiated quantity. I'll add the seller initiated quantity also. Right. Okay. So these are the two quantities you can see now. Okay. So what I'll do is I'll change the color for the seller so that we can differentiate. Okay. Now you can see that these are the buyer and seller. So I cannot compare these two when they are in the two different parallel. So I'll merge it. So what I'll do, I'll just go here. I click on the move to existing pane below. Okay. And I need to merge the scale also because they are not on the same scale. Okay. For comparison, they have to be on the same scale, right? Now, one more thing I'll do is that I'll just change it to line chart. Okay. Fine. For both the indicators so that I can easily compare it. Right. Now, generally what we are doing is we are trying to find a kind of using a technical analysis and the price action trading. Okay. But most of the people, what they do is they do a kind of a reversal kind of a price action trading, right? But here we are not doing a reversal kind of thing. We are just trying to, find a breakout actually. Okay. If we find a breakout, this data is going to help us that this breakout likely to sustain or not.
Correct.
Okay. Now, one word of caution before I start, we don't have to follow all these spikes that you're getting in this, right? If you see that there are a lot of spikes coming up in between, selling, buying, and if you just keep on following every spikes, we'll not make any money, right? Okay. So I'll tell you the simplest way to do it. Okay. What we need to do is you just need to find a small consolidation over the period of time, like 10 minutes, 15 minutes. Okay. Not more than that. It's not necessary that you find this spike is very big and you just go and sell it. You don't have to do it. Okay.
Rahul,
That
let
will be
me
very
ask
wrong.
you one thing. So the time frame you have selected is 1 minute. So you told that you have to wait for the consolidation for 5 minutes or 10 minutes. So do we need to go and change the time frame here in the chart to 5 minutes?
No. Keep it for 1 minute, and
1
you
minute.
try to find a consolidation in 1 minute chart only. Like
All
if I
right.
just show you, I'll just show you. Like if you see here, probably in this area you can see that, right? Okay. So there is a resistance that we have, and then we have a support, right? So you can see that market is actually moving in this small zone for like 10-15 minutes, right?
Yes.
Okay. Now what we need to do is, as soon as the market gives the breakout, now see, this was a whole range, right? And on this bar, market gave me a breakdown.
Correct.
Right. Now, if you compare the quantity, actually, you can see that seller initiated is almost 15,850. Right.
Correct.
And you can see buyers are only 2,000, approximately 2,000, a bit less than that. Now, if you see who is aggressive at this point of time, we can simply see that the seller has sold almost like 15,000 futures contract or quantity, right? Okay, at market price, which is bid price, right? Okay, so they are aggressive in selling. That's why market is likely to fall. So this breakdown and data which is suggesting me that okay, there's a huge number of sellers who are willing to sell the market at the market price, and they have sold it actually, right? So this data, this particular bar will give me a conviction that market is likely to fall from here. Okay, so I'll wait for this particular bar to get completed, this particular candle to get completed. Okay, so it's 139 candle previous day, right? Okay, now when we need to take a trade, the question is this: when we'll take a trade? Okay, so we'll wait for the market to break the low of this particular bar. Okay, so the low of this particular bar is 17,056 or 55, let's say. Fine. So we will buy a put option.
Of the candle.
Sorry.
Stop loss will be the high of that red candle, 139.
Yes, you can do it, or you can place, any swing high we have, right? Okay, or you can place it at this also, or you can do, can simply plot a moving average. Okay, let's say, right? So if I just plot it on, so I generally use 20 periods. Okay, so irrespective of what the people are using, they can use any of the indicator which they feel good. Okay, so let's say if I place this, so on this bar I have this blue line as my stop loss, which is 17,673,
which is nothing but
so
the 20 EMA.
I generally use 20 EMA. Okay, any of the way, some people have different convictions, right? So they can use any which they follow, right? Okay.
Got it.
It's no hard and fast rule, right? But using these indicators, we have some rules that we need to follow. Okay. So moving average could be any, right? Okay. 21, 25, whatever they use. Okay.
Fine.
Now the question arises that we have taken a trade. So at once the market will break this low. Understood, right? And you can see the quantity is again very high on the selling side. Now I got a conviction that market has to fall. So what I'll trade, I'll simply go and buy the put option ATM. So if the market is trading at 17,650, we can simply go and buy 650 put option or 600 put option, whichever suits you, right? Okay, mostly we'll go very near to the ATM, right? Now see what happens on the next bar. Market actually formed a red candle, and you can see the quantity again. It's 21,000 and 10,000. So again, it's a huge quantity. Now you see again 12,000. Okay. Now keep on seeing. If you keep on check till this point, right? Okay. The sellers are always aggressive. Okay. Right. Till this point, the sellers are very, very aggressive at that point of time, right? So if you check it till this point, market is exactly at 17,605. We got almost 50 points. Right? Correct. So and obviously whenever we are using the moving average, we have to lose some of the profits, right? Okay. So see if the market started moving up, and we'll get exit somewhere here, right? So we will only able to capture this much point, like 56 to 34. It's 20-30 points, right? 20 points approximately, right? So you can decide any of the way. Sometimes what happens, market can fall by 100-200 points also, and then it recovers. So you will able to capture some of the points, right? Okay. But if you see here, what you can do is you can even decide, let's say my stop loss was approximately 20 points. I'll wait for 30-40 points or double of it, right? 40 points approximately, right? So from there, market came to actually 650, 610. We can book the profit somewhere here, right? Even that is another good idea, right? Okay. So you can do it. So the idea behind this particular tool is just to give you entry on a breakout on a very smaller time frame, which is 1 minute, and to have a very good conviction that this is likely to survive. And when we are trading a very small time frame, we don't have a problem of theta, right? So it is always best to go and simply buy naked options in this area, because this trade is not likely to survive more than 10, 15, 20, 20 minutes. Okay? This is a very huge time. Okay. Even so max to max 30 minutes.
Scalping, Rahul, 1 minute. So as we are doing scalping also, that too in 1 minute, so we can capture the quick move and we can book the profit. We don't want to wait for big profits, right? Yeah.
Exactly. That's what I tell you. Some people like to follow trends, right?
Yes.
So if I enter it, some people will exit somewhere here because if they're following a trend. But here, as I told you, that at this candle, I have a 20 rupees stop loss. Correct. Right? So if I decide, okay, I have a 20 rupees, I'll wait for 40 rupees. As soon as I get 40 rupees, I'll take the exit. Okay. Correct. So in that way also, if I've captured like 50% strike rate, I'll still be in a profit. Right? So that is one way that we can do it. Okay. So the idea behind is that only just find a small consolidation, wait for the breakout. If the breakout is on the higher side, buyer ratio should be higher. If the breakdown is on the lower side, the seller ratio should be high. And that is the only trade that you have. You can find multiple trades in a day. Okay. You can see there are a lot of trades will come throughout the day also. You can see here also in that day, on the same day only. So this is again a consolidation, right? If you see there is a small consolidation happening. So I'll place a resistance here and I place a, let's say, support here. Okay. Now you see when market gives you a breakout here on this bar, right? Correct. Okay. This is the bar we got a breakout, right? Now you see the quantity is 8,800 and 32 is the seller. So at least we need a double of the quantity. Like seller is 32. So I need at least double of it. So right? minimum the thing is like the quantity should be double when we are at least something minimum, right? Okay. Yeah. So that's a very subjective. Sometimes you will find 3 times, 4 times, 7 times also. If you see here on this bar, you can see how much quantity is 31 and 30. Correct. So at least 2 is 2.5, right? Okay. Sometimes you get this. So at least we need at least minimum to minimum double, right? Okay. Double. Now if you see here, we will be taking the entry on the high of this bar, right? Okay, that is 17,672. Okay. I bought a call option here, and when market went up to almost, if you see the high, it was 760. Okay, so almost like you got 50 points again, approximately somewhere here, right? So if your stop loss is 20, 30 points, decide your target and exit it, right? Or wait for a very big sell. So here we have a very big sell. So I will be exiting somewhere here if we want to go in that way. So its exit will always be from your side, any trader who is trading it, because they have a different perception about the market. They have a different risk reward expectations. They have a different risk capacity. So exit they can define in any way. If they like what I am doing it, they can follow it. If they have different, then they can decide a different way to do it. Okay. So the idea behind is that you can simply see that these kind of trades and keep on coming throughout the day. At least you will find 2 trades, okay, in Nifty, Bank Nifty both. Okay. I would preferably suggest all the people that they should go mostly from the indices as of now, because we don't have a liquidity problem in the indices. Okay. Because if you trade the stocks, we find a lot of illiquid options, right? Okay. So I won't recommend to you guys to stuck in that kind of situation. Okay. Nifty, Bank Nifty do have a very good liquidity point. So we can simply enter and exit any point of time, right? So we will never be getting stuck in this. So it's just a simple tool. Whenever you find a consolidation, wait for the breakout. As soon as the market gives a breakout, enter in it with the ATM call option. Okay. Why we are good in this? Because we are looking at this conviction of the people who are trading at the market price. If they're trading at a market price, they also have a strong conviction, right? We are just following that path. Okay. So you can see that here we got one more trade here, and throughout the day market was up.
Rahul, can you show some example in Bank Nifty?
Yes, sure. We can check on the Bank Nifty also, right? Okay. Most of the people like Bank Nifty trading,
Bank
right?
Nifty
Okay, so
trading.
I understand, right? So one point that whenever we trade like this, so what happens? If you see, most of the time you will see very big spike at bottom also.
Correct.
Right? So people will always say that this is giving a fake signals. Okay, no, it's not a fake signal, because we are entering at a lower point. Market is not giving us a fake signal. You need to find a consolidation. If you see here, we have a consolidation here only. If you check here, so on this bar also we got the entry. So this big bar. Okay. So if I just show you, this is the bar which gives me entry. Now you see the quantity is 9,000 and buy it's only 9. It's 10 times almost.
Correct.
Right.
We can initiate a sell.
Yeah, exactly. So see, the market price was 41,245 approximately. And from there, market fell to almost like 14,100, almost like 150 points we got, right? And this is the future. And when we take the trade in the option, we can at least get half of it, right? ATM option, we are buying it. So we can simply capture half of it.
Correct.
Right? So 75 points, 60 points, we can easily capture in this also. Right? So this is the only agenda that we need to enter and exit we need to do. But we'll only do when we have a consolidation in place.
We have to find the consolidation in the 1 minute time frame, and we have to check for the sellers and buyer initiated quantity and then enter into the trade.
Exactly. You can see that here also it's a small consolidation, and one market gives a breakdown here. You can see the quantity 5,000 and 2,700, approximately double, right? We can go for a trade. We'll enter at around 41,340. And you can see market drop to almost like 100 points again.
Good.
Right? So you can simply see 100 or 200 points moves very easy. One point of caution from another point, right, that we need to see. What happened on this day, if you see yesterday only, the breakout candle in itself is a very big candle.
Correct.
Right? Can you see that? Its low is 41,047 and high is 211. So we got a breakout candle only of 200 points, approximately 150 points, right? So in this case, we will ignore the trade. Okay.
Because the stop loss is big.
Even the stop loss is big. I have seen that whenever the breakout happens with more than 20-25 points candle on 1 minute chart for Nifty, and 60-70 points or more than 60-70 points in Bank Nifty, that moves generally don't sustain. Okay. So that's why I just only take a trade on a very smaller candles, which is giving a breakout like 10-20 points, not more than that. Okay. Like this much, some candle like this would be done, would do the job, right? Not this much. You need to ignore such type of big candles, right? Okay. This is not done. Okay. So we will not trade any of these. on this kind of candle. Okay, so breakout should not be very big. Okay. So you can see that you can now, if you see on hindsight as of now, you can simply see that we have a break consolidation and market gives a breakout and market moves up. This generally happens in this way only. You will get a conviction by this data that, okay, whenever there's a breakout, the buyers and sellers are aggressive and you can also go and take the trade. That is the only agenda behind it. And simplest way, you can plot a moving average, super trend, any of the indicator will support your trade. Okay. This particular order book data will help you with any of the indicators which have a trending move, right?
Correct.
Okay. That's the only thing, right? So you can simply use it and you can, do the scalping actually, right? Okay.
So this
Yeah,
is a
any questions?
strategy for Nifty and for Bank Nifty for intraday traders.
Yeah. Simply, as of now, I will suggest all of the people to go with the, indices only. You can trade it on the stocks also, but I would suggest that only go with the first 20 or 30 stocks of Nifty based on the market cap, right? Like Reliance, PCS, Infosys, Hindustan Unilever, kind of ITC, kind of SBI, right? Kind of these stocks, if you see, you will find this quantity, but you have a liquidity in that. Let me open SBI, right? So you can see that you might find a good quantity here also, right? But in some of the stock which is not liquid, they will not give you any of the, clear sign here.
Most
So
won't be
ignore
there.
that.
Yeah.
Right. Okay. So you can check of any of the stocks also, it will work. But I would always suggest first 20, 30 stocks and Nifty Bank Nifty. That's right.
Okay.
Yeah. Any other questions on this if you have?
And only do we need to include any other indicators other than this? You have shown with the 20 EMA, right? So
yeah, I just plotted because I use it. Some people use it as using it as super trend. Okay, so super trend you can use it. Like if I just show you this way also. So we can use the super trend breakdown also in this. So here you can see that super trend gave me a breakdown on this bar, right? And you can see there was a consolidation. You can easily catch the consolidation with this. Okay.
Okay.
So you can simply see that here we have a breakdown and is a huge quantity again. Spike is there. So we'll be buying a put option here and we'll stay in the trend while market is not turning bullish in this case.
Correct.
Right. That's all. That's all you need to do, right? Okay. Probably we'll take the exit and we'll enter again here. Okay. And then you can capture the move. So SBI falling from 531 to 528 is a good move, right? Okay. On a 1 minute chart. So you can use the super trend also, right? And super trend will eventually help you to find a consolidation also. If market does not moving anywhere, it will form a straight line, right? And after that, if market gives a breakout, you can see here, right? So if I just plot it, you can see that there was a consolidation and this red line eventually help you to find a breakup, right?
Breakup.
Right.
So above that green candle, we can go for buy.
Yeah. And you can see you can compare the quantities. The quantity is double. The trade is yours, right? You can simply go and take it.
We got the confirmation.
Now the most of the questions that I get is what is the accuracy of it, right? Okay. So accuracy point of view is always, I would say, even you will be able to achieve 50%, you'll always make money in this. But this particular tool, which I feel that over the period I have developed a good sense of it, so you can easily achieve 75% accuracy. But initially, even if you get 60, 65, it's good, right? Okay. Again, even if you go with 55, it's good, right? So accuracy is good, but you need to trade it the way I'm teaching, right? The way I've showed you. Okay. Don't follow all these spikes. Okay, eventually that is not a right idea to take a trade. Find a consolidation, breakout, and then that's the trade, right? So as I told you in the initial, we are not using the price action as a reversals. We are using the breakout as a trending trade on a very small time frame. That's the agenda, right?
Got it.
Yeah. So any other questions that you feel that should I address? Because I think I have addressed all the points.
I thought of asking about this indicators only, because no people will be asking about what are the indicators we can add.
So we have like almost if you just write Q hyphen, okay, so you can see there are a lot of indicators which is coming only from the order book. You can see Q order, right? So cancel order, buy quantity, cancel order, count, buyer initiated, seller initiated, new order, buy count, new order, sell count. Okay, so these are all the almost like 33 analytics that we have. Okay, but you don't need to go and check all the indicators. Slowly and gradually, you can create a sense of all the indicators. But initially, where, which is going to give you money, which is going to give you profit, or, some trades actually. So these are the two indicators, which is buyer and seller initiated, right? So I'll just explain what is buyer and seller. I've already explained, just a small idea. Buyer initiated quantity is the quantity that has been executed at the market price, that is ask price by buyers. And seller initiated is that people have executed, or traders have executed the futures at market price, which is at the bid price, right? So if someone is creating a trade on the market price, we have a strong conviction. That is the idea we are following in this.
All right.
Okay. Yeah. So that is the only thing that we can do. Okay, it's a simple way, and as you said, it's the most efficient way to do it, right? Yeah, it is that, right? Okay, and anyone can use it. You don't need a very good experience to of the market to hold it. You just need to have a small understanding where buyer and sellers are aggressive. That's all.
Just need to find the consolidation area and then initiated the buy and sell.
Exactly. Some people do ask me that, sir, can we use it on a 5-minute chart? I would suggest try to trade it on a 1-minute chart, right? Because what happens, I used to trade on 5-minute charts also earlier, right? But since I'm using this particular system, I have a good conviction that 1-minute chart also works. You may find initially very difficult because there are a lot of noise happening when we are trading in a 1-minute chart. But Nifty, BankNifty will give you very comfort to trade even a 1-minute chart. We have a good liquidity in 1-minute chart also. So you can trade it, okay? Without any fear, you can trade it.
So Rahul, so till now we have shown for scalping setup. So using this tool, can we trade for swing and for the positional?
Yes, but not order and trade, because as I told you, it is a scalping tool. Okay, so we'll always be using this particular tool for a shorter period of time. But yes, we have a different other tools which basically help you to identify, or I would say, forecast the market, and then you can place a trade. Okay, so let me share my screen. So this is order and trade. We're not using it now. Okay, this is just for a scalping tool now. Okay, now once we move to a positional trade, right? So we need to check a lot of data, okay? Because it's not for a 10-minute, 20-minute trade. We need to have a good clarification for a longer period of time. Understood, right?
Correct.
So in this way, we need to study a lot of specifically two major data. Okay? That is open interest. So if I just talk about the open interest can be seen for option writers. Sorry, I would say options and futures, right? Okay. So in the future context, we have the open interest, and in the options we also have the open interest. First of all, we'll check the built up. Okay. So built up, if I just go and open the first screen, which is symbol, you can see that it gives you a 4 price and open interest relationship. Okay. If I just click on this, you can see long unwinding, short, and short covering. Okay. So what is long? If I just click on long here, so you can see what is happening. If the price moves up and open interest moves up, it's a long. You can see the narration here, it's a long, right? You can see all the stock which is showing here, they all moved up and their open interest also jumped. You can see BankNifty is long. Chola Finance also price went up by 8% approximately, and open interest increased by massive 25%, 26%, right?
Yes.
So that's a clear cut long positions happening in this. Long positions, how? People are buying it, right? As soon as the seller is offering a higher price. So people are ready to buy at any price the seller is offering. So it's a good buying happening in this particular stock, right? So that's the first condition. Second condition
when we
is,
come to long here,
yeah.
So we can see the price, OA, and the percentage of both.
Yeah. So if you see here, these are the prices. This is the price of the BankNifty, and this is the OI. And price has jumped by 0.7% from the previous day.
Correct.
And OI is also increased by 2% from the previous day.
Correct.
Right? When both are increasing, it's a long position.
Long position.
Right?
Okay.
Second one is long unwinding. Okay. Now you can see simply by looking at this, what is happening with the price and where you can identify what is happening. See, Titan price went down by 1.05% and open interest also went down by 5.858%.
Yes.
So what is happening? There's an unwinding happening. So what is unwinding? Unwinding is a kind of profit booking happening after longs. So someone has done a long, now they are unwinding the position. Right? Okay.
Yes.
So that's a long unwinding happening in this. Okay. So long unwinding should always be followed by long. Okay. So you see that it's long, 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 long happening, and then there will be some situation when long unwinding will start happening. So price will started coming down. I'll just explain a very simple concept that probably, let me draw it so that we can understand it. So when we do the technical analysis, you can see that the market moves up like this, it comes down like this, it moves up like this, it goes like this. So this is the basic structure of the market happening, right? Okay, fine. So I would suggest that, I would say, whenever the market moves up, we should have a long positions mostly in this area. We should have a long unwinding positions mostly in this area. Okay. Again, we have a long unwinding. Okay. And then we have a long. So this is the way market should behave. So whenever there's a trend happening in the market, okay, price should be following long and long unwinding cycle. So open interest do also have a cycle, which is long and long unwinding. It's an uptrend, right? And there are two more relationships. Okay, let me come back to that thing, then I'll explain it again. Two more relationships comes out to be, right, short. Okay, so you can see here what is happening. The Dabar is going down by 4%, and open interest is again a massive more than 10% on a single day. So it's a clear-cut short position happening in the, in these stocks, right? Okay, and again, as long unwinding is just followed by long, so then there might be some people who do a profit booking after shorts also, right? So short covering is a kind of a profit booking for shorts. You can see here, so price is moving up, but open interest is falling down, right? So these are the two more conditions. Okay, so if I just come back to the diagram, so when market falls, it should be short, and when market showing a profit booking, it's a short covering, right? Again, it's a short covering. Okay, fine. Again, it's a short, right? So when market is falling, right, market is coming down. Okay, so it's a downtrend and it's following a short and short covering, right? So the idea behind this reading this particular thing is that whenever market goes bullish, right, okay, you should follow long and long unwinding cycle. Okay, and when market is bearish, okay, it should follow a short and short covering cycle, right? Simple one. Okay, and we have done a color coding in the application, so you can simply understand. Green color is for long, blue color is for long unwinding, red color is for short, and yellow color is for short covering. So you can simply, by looking at this, you can identify what is happening in the underlying. Okay, now let me show you how this happens.
So
let's
Rahul,
go
in the live market, whether this data will get refreshed?
Yes. So basically, if you see, this data is actually open interest data, and NSE updates this data on a 3-minute basis, right? Although our application is live, right? Most of the data comes live only, but the OI data is actually NSE also published at 3 minutes delay, right? So you'll get this data 3-minute delay, right? But eventually that does not make sense to read this data on intraday. Okay, whenever we do a positional trades, we always check this OI data and EOD, not the intraday. Okay, in intraday this data doesn't make any sense. Okay, so we need to check the cycle. That's why I told you we need to check the cycle. Looking at the 1-day data, we cannot decide what is happening in Nifty. Okay, if you see this today, Nifty is showing a short covering, but it could be a downtrend, right, for the Nifty. I don't know. I need to check historically how the stock is behaving, how the Nifty is behaving, right? So you need to have at least 20-30 periods days data to check this. Okay, so if I just go in the third tab, which is future OIH, okay, and if I just check few back data also, okay, you can see here, if you see this particular area, you can see what is happening in Nifty here. From here, if you see, it's a short, and then again we have a short covering, then we have a short, then mostly we have a short covering, and then again we have a short. And from here, see, market fell like anything. From 18,000 approximately, market came to almost 17,400. 600 points fall in few days. Again, then what we have, short covering, short. Again, my market went for short covering, and then from here, you can see 17,600, and then see market comes to 17,000.
Correct.
So if you see, just by looking at these colors, you can identify what is happening in this particular stock. Do I need to check a chart? No, I really don't need to check the chart if I'm able to see this particular thing very easily. Okay, likewise, I can show you on the something on the higher side also. If I just have a old example, just I'm showing, but I'll try to find some of the stocks for that too also. Now you can see in the Britannia stock from January, you can simply see that till February starting, you can see only long and long unwinding, green and blue color, only green and blue color. You can see green, then we have a profit booking, then we have a buying, then profit booking, then buying, profit booking, and see from here market shows a good buy. Again, profit booking from here, a good buy, right? So see how beautifully, if the cycle is there, stock moves in an uptrend. How beautifully you have seen that short and short covering cycle was in Nifty, and we can simply see that it's going down. Simple, right? Okay. Now the question arises that, okay, sir, you told me that it's a, it's a long unwinding. It's the stock likely to move up. Is a short and short covering, the stock is likely to fall. So that's a cycle happening. But how do we find a stock which is having a long unwinding cycle and short covering cycle? Because there are 200 odd, stocks in approximately in F&O list, right? How do we find it? So for that, we also have something called a cycle tab in between, right? Okay. So this will help you to scan out the stock which is actually trading in a downturn, right? See, so what I need to do is I'll click on reading, okay, and I'll go for long and long unwinding. As soon as I click on this, I have a column of count here. So I'll place it as 14, let's say. So why am I putting a 14? So what I'm doing here is I'm looking for a 20 periods data, right?
Last
and I'm trying to
20
find,
periods, is it?
20 period, okay, at least a one month, right? Okay.
1 month.
And I'm
right?
trying to find that is there any stock which is following a long and long unwinding. That means it has a green and blue color at least for 14 days, not 20 days, because I know that there's something called a random data coming in between. Sometime it will happen, a short will come in between, short covering will come in between. So it's not happening that for 20 days it's long and long unwinding. There might be some data in between coming up, right? So what I'll do is I'll simply trying to find 14 days, that is 60-70% of the data if they are following some cycle. Okay. Now I'll click on apply. Now you can see that this list has been shorted, right?
For long unwinding, right?
So you can see that there are a lot of stocks which is only having a green and blue color. Most of the stocks, right? You can see Glenmark. If you see Glenmark from 23rd March, so it's data we need to read from right to left. Okay. So it's 8th March, 9th March, likewise it's moving in this way, right? Okay. So if you read the Glenmark chart on 23rd, it was a long, right here. You can see it's a long. Let me mark it like this. It's a long here. Okay. Then we have a long unwinding. Then again 2 days long. Then long unwinding.
Long.
So by looking at this data for 4 days, okay, can we identify there is a cycle? Yes, there is a cycle started building up. It's a long unwinding, long unwinding. Now on this day, on 31st, as soon as I get one long again, I feel that what was happening in this? Let me just draw it. Okay, if that happens. So it was long and then long unwinding. Okay, then 2 days long and then long unwinding. And then again we have a long like this. So it's a
Rahul,
reversal, right?
1 minute. So when to enter into the trade using this data?
This is what I'm explaining you, right? Okay, so if you see it, this is the reversal, right? On this day, 31st, right? Yeah. On 31st, I got to know that, okay, market again shows me a long build up, right? It's a buy side on this day, right? So this is the day, it's a reversal, I'm going to take a trade, right? If you check Siemens, right? Let me show you. These are the 3 days we have long unwinding, long unwinding. These are the 2 short covering, we can ignore it. Here we have a long, and on this day market went down for a short. Again, we have seen a long. So again a reversal, right? So yesterday, day before yesterday, market fell. Now in the previous session, market went up. Price moved up and OI also moved up. So it's a kind of a reversal happening in this. If you try to picturize in the chart what is happening, we have 3 days long, then long unwinding for a few days, long 2 days, 1 day long unwinding, 3 days long unwinding, and then we have someday we have a short. But again, market reverses and shows me green. So I'm trading somewhere here, right? And again, market pick up the trend, market will likely to move up like this again. This is what the agenda, okay? So I've already identified these are the stock which is actually trading in a long unwinding. You can see TVS Motor, it is long unwinding, long. Then we have a short, ignore it, one short, okay? Then we have long unwinding, long unwinding, then short covering, ignore it, long, ignore, and long. So see, it's a clear cycle. We have only one short in between in last 15-20 days, right?
Means majority
Okay.
will be long.
Yeah. So if you see, majority should be long and long. Right?
Okay.
So let's say I want to take a trade in TVS motor. Let's say. Okay. I'll go with the TVS motor trade. I feel that okay, TVS motor is likely to move up. Now what I'll do is I'll do further analysis of the open interest. Okay. So I'll check the open interest from the options perspective. Right. So I'll go with TVS motors. Now you can see that there is a very good and strange thing happening in this. As of now, we have identified that TVS motor is actually having a long unwinding cycle, which is in the futures market. Right?
Right.
Now, if you see this chart, it is a TVS Motors options chart. Options chart means OI chart. Okay. So you can see that 1100 was the highest call option for the TVS motor.
So these green
Right.
and red bars are the
Call and put open interest. So
yes.
yeah. So if you see, if I just put my cursor on 1100 call option, you can see the total open interest call, total open interest put. And in bracket, it's showing you the change. Right? So if you see 68,600 negative, that means there's an unwinding happening in the call option of 1100 because the price is moving up. So price is actually giving me a breakout here on the from resistance. If you see, this is the highest call option, right? Which has the highest open interest. And this is the kind of a resistance that I was facing. And you can see that people are actually exiting from this call option also. It's a huge dent actually. You can see there's this hollow on the top is showing that there's a huge unwinding happening.
So the hollow,
Right?
the unwinding is happening, right?
Yeah. And if you see it's filled like this, it's an addition.
All right.
Okay. So if you see here, it is clearly indicating me that the option writers who were selling 1100 call option, they are also skeptical now that the stock will not likely to stay below 1100. It will move up. So that's why they have cut the position in this case.
So Rahul,
So for
basically
me, the upside is totally open now. In future, it's long unwinding, and option traders are also saying that it's a trending stock now. We should not be entering in this.
So basically, this red and green bars act as a like resistance and the support.
Yes, yes.
Right.
So the highest green bar, which has the highest open interest, is work as a resistance.
Correct.
And highest red bar is working as a right. So if you see that this is breaking the highest call option, and 1200 could be my expected target from here.
Great.
So if the stock moves above from tomorrow, let's say, and it's likely to reach 1200, okay, I would be having some stop loss. Let's say 1080 is my stop loss. If stock doesn't move, I have to exit, right? Or let's say 1060 is my stop loss, right? So I have a 40 rupees stop loss and 100 rupees target, which is good, right? Okay.
We can keep the stop loss near to the support, right? Where the red.
Yeah. So support, if I say it, support is very below. It's 1000 rupees. It's
Correct.
100 rupees, right? So I'll not go with that 1:1 ratio. I feel that there's a good condition that long unwinding is there, and stock is likely to move up, and there's an unwinding also happening. So 30-40 rupees stop loss is okay in this because I'm going to get 100 rupees as a profit.
Okay.
Right. So while without looking at the chart, I know what is the trend of the TVS. I know what is the level that I can expect, and I know what is the level where should my stop loss is. Right. Right. We don't need to check actually the chart, right? Without checking the chart, we can simply identify trend levels. And next thing what we need to do is that everything every trader faces is the strategy, right? Which strategy should I make so that if the TVS motor moves from 1100 to 1200, which should give me the best profit? Or if the market falls, I should have a limited loss. That is the question, right? And that problem is faced by every option trader. But I also have a solution for it, right? You don't need to do any kind of mathematics from your side. This application in itself has a solution for it, right? Okay.
That's
so what
nice,
I do is
Rahul.
Yeah.
That's nice.
Yeah. So that's what I like it because you don't need to check the chart, you don't need to do anything, but you need to have understanding of some
everything in the single tool. We will get it, right?
Yeah. Any of the So now what we do is we have a good understanding of that TVS motor is bullish, and I'm anticipating this can move to 1200, right? And my stop loss is 1070, let's say. Okay. So what could be the best strategy that I can get out of it is what we'll do. So I'll ask the optimizer. And for your information, if I just tell you, when we started the Quants app, okay, optimizer was the first tool that we have, only one tool.
Oh.
Okay. way back when we started in 2016, right? Okay, so we have only one tool, that is optimizer. Okay,
Okay.
and later on we have created all those things, right? So optimizer is very close to our heart. Okay, fine. So let me tell you what it do. Okay, so it's a very magical tool, right? Okay, so see, it's a TVS motor. Okay, that is fine. Next thing, I need to tell it that, okay, my view is bullish. So your view can be bearish, your view can be either side, or your view can be oscillating, right? So I'll tell him, okay, my view is bullish. And I'm anticipating that my target of 1200 will come by, let's say 21st, or let's say expiry. You can take any of the things, right? Let's say expiry, final expiry, okay? My target is 1200. Okay, so let me just 1200, and my stop loss is 1060, let's say. Okay.
Yeah.
Fine. Now I'll ask him that please give me the best possible strategy for this forecast. I have a forecast for previous motor. One more thing that I can add is I can put a cap to my loss that I want. How? Let's say I have some XYZ capital and I want to put a cap to my loss. Let's say I don't want to lose more than 15,000 in this particular strategy. Whatever strategy this is going to give me will not give me loss more than 15,000. And I'll select a limited risk only strategy. Now see, I'll click on apply. Now see, it has given me 5 best possible strategies.
Oh, all right.
Okay. And I will go with the limited risk strategy, right? Or I can go with the which is having a best risk reward, whatever I feel like. Okay, fine. But if you see this, these two strategies, bear call ladder and call ratio back spread, you can see the drawdown in these strategies are very huge. If I just plot it here, you can see this strategy has a maximum drawdown of 2,17,000. This strategy has a maximum drawdown of 2,68,000, which is giving me a good profit also. Okay, 2,80,000, 2,91,000. But against it, we have a maximum loss of 0.6 also, 2.17 also, right? So I'm not going to go with these two strategies. These are two straight away rejected. I'll go with some limited risk strategy. If I just go and select bull call spread, you can see that it's giving me 5:1 risk reward, which is my profit will be 71,000 if 1200 is reached by previous motor by expiry. And if that goes against me totally, I'll lose 12,000 only. So how do I create this strategy? Okay, so I'll go with the bull call spread. I'll click on this. You can see it is suggesting me that here that you need to go and buy 1140 call option, which is trading at 11.5, 2 lots. You need to go and write 1200 call option, which is trading at 2.5, 2 lots. Okay, and this is my profitable levels now. If the market moves up and it reaches my target, which is 1200, I'll make 71,000 as a profit. If market goes against me to any level, because this is a limited risk strategy, I'm not going to lose anything more than 13,000. And you can see 12,670, right? So it's 5:1 risk reward that we have. Okay, 20 days I have approximate margin that I'm going to have is this much, and you can see the payoff graphs also, right? Okay, now let's say I want to execute this particular strategy. Okay, so I'll open this into the architect. Okay,
so before entering into the trade, we can check which strategy we want to enter, and we can select that and we can enter.
You can optimize your risk reward, your risk taking capacity, anything, right? Okay,
correct.
You can do it. Now what I did is I opened this into the architect function. So architect is a strategy builder kind of a thing, right? Okay, now the great idea is that we have collaborated with a lot of brokers also. Okay, so this app is integrated with a lot of brokers. If you have account in your those accounts, what you can do is you can simply place the order from here only, and it get executed in your account, right? So what I'll do is, as of now, my account is not linked with anyone, so I'll just show you how to do it. If I click on the place order, see what happens. It just take me to the screen, and we have like these 5 brokers. If you have any of the accounts, you can link it from here, and you can simply go and execute the trade. It will automatically get executed in that, right? Okay, so that is the idea. Okay, so let me explain what we have done. Let me just revise it. So using the price OI relationship, which is long unwinding, short and short covering, we can easily identify there is a trend in the stock. Understood? Yeah. And you can so built up function will help you to identify which stock is actually following a trend. It's a long unwinding, short and short covering, bullish or bearish. Once I have identified the stock having a cycle of long unwinding, short and short covering, I can go to the options OI chart where I can understand what is the support and resistance and what could be the expected target and stop loss. Once I've done this, what I need to do is I just need to find a strategy which gives me the best possible profit in the if the my market if the my results are materialized, okay, or my stop loss is materialized, okay. So I need to reduce that loss. So optimizer will help you in that case. Give him the forecast, give it a forecast like what is the expected target, what is the level, and how many days you are expecting a target, and give your that I can take only maximum risk of 10,000, 15,000, 20,000, whatever. As per your understanding, it will give you the trades, okay. So that from ideation to execution, you have everything in these three tools only. You can forecast, you can decide what is the expected level and a target, and you can then you have optimizer which help you to find the strategy, and then you can execute the trade also from here. So from ideation to execution, we have everything in this particular three tools, right? So you can do this trade with this help, okay. So built up is a very great function. I use it personally for positional trades, and it has a very fantastic results, right? Okay. And you can combine it with many of the technical time indicators or anything you have. You can simply do that, right?
Yeah. And the main part is before entering into the trade, we can find which strategy we have to choose when we are going for positional trades, and we know the stop loss also. What will be the minimum risk?
Yeah, exactly. So this will eventually help you because people do have an understanding of the trend, but they don't know is there whatever the strategy they are deploying is feasible or is optimized or not. Generally, if I have to create a strategy on TVS motor, what I would have doing, I would have been bought ATM call option and sold the 1200 put option or call option only for bull call spread. But eventually, if I just seen that it is giving me a different strike with two lots also, it is suggesting me that okay, you need to take 20,000 loss, you need to execute two lots, okay. And if market reaches your target, you have a profit of 71,000, which is good, right? And which good is risk reward. So eventually that mathematics is done by optimizer, and you don't have to do it manually, right? Clear? So any other doubts on these two tools you can ask?
No. So we'll move to the next topic, Rahul.
So what you can do is now you can ask me is there any other way that you can identify positional trades, right? Because the trap is also giving me a positional trade, right? Okay. So you can start it like this, that, okay, Rahul, we have seen that using this data, we can identify the positional trade. Is there any other way we can find a positional trades? Then I'll come to the trap. Okay.
Rahul, is there any other way?
Okay. So Rahul, is there any other way that we can identify the positional trades? How to enter into the positional trades?
Yes. So this is the one way. Okay. So I've already told you that there are other ways also that we can find a positional trades.
Yes.
The first one that we have discussed is a built up trade. Okay. So built up is a very good function. Okay. Apart from this, we have one more tool. Okay. Which I again personally feel that people should have with themselves, because this is one of the new criteria to identify that is the particular stock is in a bull trend or bear trend. How do we do it? Okay, so let me just show you. Probably if you see that we have seen a TVS motor chart. Okay, now if you see this chart, what is actually happening? Can you just have a small understanding of it, that what is actually happening in 1100 call option? We have identified using the trap, or sorry, we have identifying that using the delta function, that this particular stock is bullish.
Correct.
That means the underlying structure of the stock is bullish. Now what option traders are doing, as soon as the stock reaches 1100 call option, they unwinded their position. They unwinded their position because they feel that they are being trapped here. Option writer will only feel trapped once market is trending, right?
Correct.
If market is, let's say if the market is actually trading in these two lines, market is trading here only like this, and they are writing this option, they are writing this option on the lower side. So if the market keep on moving in this area, okay, this option will become zero, this option will also become zero. They will make money by writing these two options. But what actually happened, TVS motor actually become trending, and it started coming to this higher call option. These option sellers started feeling that they are trapped, and they unwinded their position till here. they execute, they book the loss and they exit from the market. This shows that option sellers, whenever they are trapped, it's a trending market. So when option sellers are trapped, who is going to make money? The buyer is going to make money. Understood, right? So what happened, as soon as the market will give a breakout, it will move up from here. So simple understanding with the concept that a seller has a condition of where he will earn 66% of the probability that he will win, and buyer has a only 34% probability, right? Okay. Now you can see that we will only, as an option buyer, will only make money when option sellers are trapped. And this is the condition where option sellers are being trapped because TVS Motor is trending, right? But the condition comes that in how many stocks that you will keep on go and find this kind of trap. Luckily, we got something in trap, TVS Motor, right? But how will you find that these in this particular stock, there's a call writing trap or put writing trap. Okay. So whenever there's a call writing trap, it's a bullish sign. Whenever there's a put writing trap, it's a bearish sign. Okay. So we again that become problem that how many will manually will go and find this. Okay.
So Rahul,
So in this case,
using this trap, we can identify for the index also, is it?
If I just talking about the directional moves, right? You also aware of that ma'am, it doesn't happen that Nifty is going to give you 4 or 5% return every time. But yes, if the trade comes in indices also, you can check it, right?
Oh.
But I would suggest that most of the time what happens, stock has a tendency to move very drastically, 5%, 10%, in just few days, right? But indices does not move like this.
Okay.
So so we'll try to find some trades in stocks also, right? Here only. Okay. So for that, we need to go to the trap indicator, right? So if I just click on this, you can see that here is simply written that call writing trap. Okay. So Muthoot Finance has given me a call writing trap at 1,000 rupees. So it suggests that Muthoot Finance is a bullish stock as of now because the call letters are being trapped in this. Again, you can see Godrej Properties, again call writing trap. Tata Motors, again call writing trap. Dabur, put writing trap. So that means Dabur is a weak stock. Tata Motors, Godrej Properties, and Muthoot Finance, they are bullish stock. Bullish. On the higher side, put writing trap happening in Bosch also. It's again a weak stock.
Call writers got trapped for Muthoot Finance because market is bullish.
Yeah, so stock might have shown a movement, and call option sellers were skeptical about the move, so they started unwinding the position and they probably shifted to the higher call option, or probably they exited it.
So looking into the data, Rahul, how can we and where to enter into the trade, at what point?
Okay, so we'll discuss that. You can see that how this happens. Okay, let me just show you some of the example. Okay, if I just show you like one example from here, okay, you can see this BPCL. Okay, I'm not saying the trade doesn't go wrong in this. If you see here BPCL, this example. Okay. So this trade actually came on 31st. Okay. Right. Okay. On 31st, it said that there's a put writing trap happening in BPCL. And the signal price was 346.9. Okay. So on that date, suggested me that as soon as the next day market open, we'll go short in put in BPCL. And what actually happened after that, you can see that from 349, the stock current prices, or 346.9, the current prices, 333, which is almost 4% down from that level, right? And today is only 7. So in just 7 days, the stock has actually given me 4% return. And that too in the futures. This is the futures return. You can simply, if you do options, you can simply, multiply it by 4. It's a 12 or 13% or 15% return happening in the options, probably more. I'm just calculating a rough, right? So these kind of trades you can get. You can see that IRCTC gave you 7% move, right? Right. Again, some trades are still open, some trades are positive, some trades are negative. That keeps on happening, right? Okay. So now, what you need to do from tomorrow, if you see the signals here, okay. This trade should not be taken on the same day the signal is generated. So we will not take any trade on the 6th. If that signal is generated on 6th, we will not take a trade. Understood, right? Yeah. Okay. Now, if the trade comes, let's say the Muthoot Finance trade come yesterday. So I'll take the trade in the next trading section after 9:20. Okay. So if the Muthoot Finance opens around 1,000 rupees within a range of 2% plus 2% minus. Okay. If the stock is shows a gap up opening of 3%, I'll not take a trade. If the stock shows a gap down opening of 3%, I'll not take a trade. It should be within the percentage of, let's say, even if you want to reduce it to 1% also, that will work out. But it should not be huge gap up or gap down. I'll ignore the trade.
So
And price should be near.
Rahul, yeah. So you mean to say that after looking into the data, we don't want to look into the charts in order to enter into the trade?
No, not at all. You can see that in the previous session also we discussed about that you don't need to chart. Here you need to see the chart, right? And you can see here also, I don't need actually chart, right? I know that Muthoot Finance is bullish because these are our positions that traders are actually creating. So I'm not checking any chart, candlesticks and all those things. I'm just checking what traders are doing. If the traders are trapped, it's a bullish sign, right? Call letters are trapped, it's a bullish sign. If the put writers trapped, it's a bearish sign, right? So the trend is there only.
Way of trading, is it? This helps one single window.
It's a unique way, yes. Okay, because people generally don't see the data in this way, right?
Okay.
So if you identify a trap situation anywhere, you can easily identify that, okay, the stock is bullish and bearish. That's all you need to do. You can see the Chola Finance, it's also gave a breakout yesterday. It's again in this list. Okay, Canfin, Bajaj Finance, they all stock moved up yesterday. DLF also moved up, right? Bullish stocks, all these called. Yeah, Munapuram and IX, you can see that this stock has also moved up 13% yesterday, right? So you can see these are the stocks signal came yesterday.
So once we get the signal, we need to wait for the next day in order to enter into the trade.
Yes, yes.
Right.
And what happens? These are the based on white data. So what can happen? As soon as you open the trade on the next day, there might be some of the signals which already gone out of this. Right. Correct. So we need to see at 9:20 which are the signals which are still available. Let's say Chola Finance is still available. I'll go and take a trade on Chola Finance. It's a bullish trade. So I'll ask the optimizer which is the best trade that I can have. So again, I'll go in the optimizer and check it. Right, for the trade. Great. Let's say if I just check it, probably we were checking, I think, we were checking, I think, Muthoot Finance. Okay. So for additional data understanding, you can see Muthoot Finance in the built up data. Okay. For your conviction. Okay. If you just want to improvise on this thing a bit, right? So I'll just write Muthoot Finance. If there's a good longs happening in the past few days, see in the last continuous 3 days, it's a good long. And there's a call letting trap happening on the Muthoot Finance in this. So it's a good sign. I can go with the trade in Muthoot Finance. Okay. Manapuram we can check. So Manapuram is also shown a good movement in past few days, and you can see very less of the short and it's a clear cut upside. Right? Got it. Okay. So the idea is only that we have identified a trap signals where option writers are getting trapped. If they are trapped, the buyers will make money. And that is the situation is actually, this indicator will help you to find that these are the situations where these stocks are bullish or bearish. So you can simply go and take the trade in this. Right? Yeah. Simple. So idea is the same. Is that just two ways to find a trade? Either you go and find the trade from the builder, or you can find a trade from the trap. And the end result of the finding a strategy will go to the optimizer and ask it simply. Right? So trap is a very good tool. I like it personally a lot, and it gives you very good trending moves. Like on an average, you can have with my anticipation, you can have on an average of 5 to 6% return. Okay, and on the loss side, if the trade goes wrong in this, it will ask you to exit around 1.5%, not more than that. Okay. All right. Okay, so that is the thing, and the way I'm teaching you, if you follow that, you can have a the strike rate of 60-65% very easily. Okay. And always go with the limited risk strategies. Okay. Like bull call spread, bear put spread in this kind of thing. Because I am not sure that in how many days that I'm going to have a, exit of this strategy. Right. Okay. So that is the way you need to follow it. And the day it is giving you exit, it will just be written here only on the close after the price exit in the bracket. So if you have let's say if you you have holding this PPCL, like say Monday, it shows you P exit here. Okay. Exit around this price. So we'll go and take the exit from that particular. So we can take the trade in this app only. After entering into the trade, that only will show exit. Yes. That's what in itself. So it is giving me entry on 31st on this price, and exit was also given by this. All right. On the same day, right? Or probably whenever it feels that it is going to give me exit, right? So any of the day, right? Simple, right? Yeah. So one of the very good way to identify the trades, positional trades. One is built up, second is trap. Both are equally efficient. The only idea comes to the point where is that, what is the strategy that you're making. So strategy will always be giving you a upper edge actually, right? And we are studying the data. We already have an upper edge with a lot of traders. But when you create the best possible combination of the strategy, again, you have a optimize your return. So that is the thing you need to do. And simply the optimizer, built up, trap, and OI are the sufficient tools to understand. And for positional trades and for intraday, we have already done the order entry, right?
So Rahul, for as an option buyer, so far you have explained very well. As an option buyer, we'll get a momentum for the index as well as for the stocks. So very nice explanation. So for the order and trade, build up and trap. So you have explained very well. So thank you for the session.
Thank you, ma'am, for calling me actually, right? Yeah.
Thank you so
Okay.
much.
Thank you. Thank you.
Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.